let's be honest, VeChain isn't the hot, flashy name it used to be. Back in 2021, when the crypto market was on fire, VT was sitting comfortably at 21 cents. Everyone was shouting about supply chain revolution, enterprise adoption, and real-world utility. But since then, silence. The price collapsed. The hype vanished. Most retail investors moved on. But here's the truth no one's talking about. While everyone else was distracted chasing meme coins and AI hype, VeChain's ecosystem was quietly transforming, building, partnering, and laying down the kind of foundation that could make its next move one of the most underestimated comebacks in crypto. And that's why I'm still bullish on VeChain even after all this time. Think back to the last bull run. Every project promised to revolutionize industries. But VeChain actually did. They were one of the first to bring blockchain into logistics, retail, and sustainability. They worked with giants like Walmart China, BMW, and DNV. Real partnerships, not vaporware. Yet, as prices crashed, investors forgot. When Bitcoin fell, so did VeChain. And while other coins reinvented themselves with hype cycles, VeChain quietly kept shipping products. Fast forward to now, October 2025. VeChain sits around just a few cents, a far cry from its all-time high. But something's changed, because under that quiet price chart, there's movement, real movement. On July 1st, VeChain launched something called the Stargate staking program. This wasn't just another earn rewards gimmick, it was a complete upgrade to the VET ecosystem, giving holders a way to lock tokens, earn yield, and reduce circulating supply. Analysts like Crypto Michigan NL and Michael Van de Poppy have pointed out that this staking system could be a game changer because it directly lowers inflation and incentivizes long-term holding. That's important because VeChain has always been a fundamentally strong project, but the tokenomics were a pain point. There wasn't enough incentive to hold VT long-term. Stargate flipped that. Now, more people are locking up their coins, meaning less selling pressure and more network engagement. And the sentiment online? Surprisingly bullish. Now let's talk charts. According to CoinMarketCap's recent analysis, VT has been hovering just under a key resistance level at $0.0232. That number might not sound like much, but technically it's massive. A clean breakout above that level could open the door to higher moves, possibly retesting 3 cents or even 4 cents in the medium term. Some analysts, like Crypto Patel, have been more cautious, warning about potential drops to $0.0177 if momentum fades. So when the next market cycle heats up, and it will, don't be surprised if VeChain suddenly reappears on everyone's radar again. Because the truth is, the groundwork for that return is already happening right now. The question is, will you notice it before the rest of the market does? If you've been holding VeChain through the highs and lows, respect. You've been through the quiet grind most people can't handle. And if you're new to it, start watching the fundamentals, not just the price. Because sometimes the coins everyone forgets about are the ones that come back to surprise them all. Now, let's dive deep into the full details of VeChain. VeChain isn't just another token. It's a full-fledged platform designed for real-world applications, especially in supply chain management. Recently, BitSE News dropped an ultimate guide on VeChain, $VET, and it's packed with insights. Let's break it down in simple terms so even if you're new to crypto, you can grasp why this project is a big deal. VeChain kicked off in 2015, founded by Sunny Liu, who used to be the CIO at Louis Vuitton China. His background in luxury goods gave him a front-row seat to supply chain headaches, like counterfeiting and lack of transparency. So he built VeChain to fix that using blockchain. Fast forward to 2025, and VeChain has grown into a powerhouse for enterprise blockchain, focusing on real-world assets rather than just hype-driven trading. At its core, VeChain Thor, the platform's blockchain, combines blockchain with Internet of Things, IoT tech. Imagine slapping a smart chip or QR code on a product. This creates a digital passport that tracks everything from manufacturing to your hands, all immutable and tamper-proof. It's compliant with big regulations like those from the European Securities and Markets Authority, ESMA, making it enterprise-ready without sacrificing privacy. Now let's talk tokens. VeChain has two, VT and VTHO. VET is the main utility token used for transferring value and staking. There's a fixed supply of about 86.7 billion VT, which means no endless minting like some other cryptos. It's super precise with 18 decimal places, perfect for everything from tiny IoT payments to big business deals. VeChain is the gas that powers transactions. Holding VT automatically generates VeChain at a rate of 0.000432 per VT daily. No staking hassle required. For instance, if you hold 10,000 VT, you get 4.32 VeChain every day. Transactions burn 70% of the VeChain fees, which helps keep the system deflationary and rewards network maintainers with the rest. This setup keeps costs predictable, even when the market gets wild, which is a huge plus for businesses. One of the exciting parts of the guide is the 2025 upgrades. The Galactica protocol, launched on July 1, 2025, brings Ethereum compatibility through Shanghai EVM integration, making it easier for devs to build on VeChain. It also burns 100% of base fees for VeChain, ramps up scalability to potentially 10,000 transactions per second, TPS, and introduces type transactions for smoother operations. Then there's Stargate, a new staking platform that went live the same day. It offers $15 million in VeChain rewards over 6 months and uses NFTs for staking positions. Staking limits jumped from 25 million to 600 million VET, with tiers like Dawn Node, starting at 10,000 VET, up to Mjolnir Node, 15 million VET, giving multipliers from 1x to 5x. This makes staking more accessible and boosts network security.